Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. I just want to do a very brief grains commentary for today, Wednesday, May the 20th. We'll start with corn. There's nothing really to talk about in all seriousness. We've been in a consolidation little range in here for a while. The market does absolutely nothing unless it's some other catalyst, whether it's the wheat, the beans, or even the dollar. So when you look at the way corn traded these last couple of days, you had a glimmer of hope for the bulls, last week, and they just gave it back immediately. You looked at weather and temperatures and all the stuff that people were trying to talk about. Market gives it back instantaneously. Personally, I think the market rallied because the short position in the wheat was big enough that wheat was able to rally whatever it was, 40, 50 cents in very short order, and suddenly corn started to participate. This moment in time, the grand scheme of things, the crop's ahead of schedule. We got rain, and the forecast looks good. There's going to be a weather event that we can discuss at some point. It's not right now, as much as you've got a lot of people talking about 30, 40 degree temperatures in some areas, and we need to be blunt about it. This is an annual thing. So in my mind, I don't see anything in the near term that's going to get corn excited to the upside unless it's a catalyst from somewhere else, and or if we see demand really pick up. So be looking for at least 1 million metric tons on corn tomorrow. At least we'll see some supportive demand there, and maybe that'll allow us to trade a little higher. The range today is indicative of a market that has no interest in doing anything, and the volatility is showing you that. Moving on to wheat, big rally these in the past few days. Sold it about 25 cents off the high very quickly yesterday. We traded lower initially this morning, and then we traded back up. It looked like the wheat corn spread to me. We haven't seen the commitment of traders, so we don't know how much of the short position in Chicago they have tapered down. Time will tell. If you remember the last 20, 30 cent bursts that we saw, they hardly took any of the position off, and as it turned out, the market ended up going lower. So fundamentally, you guys know that globally there's a tremendous amount of competition everywhere. Maybe if we could see the dollar slow down and we see good exports, we'll have something to talk about. But right now, my opinion is the rally we saw in wheat is purely a function of an illiquid market that had too big of a position that was one way. There was the frost and the freeze, but I think that was a far smaller portion of the rally than what the short covering was. So we'll find out when we look at the commitment of traders. Soybeans are falling under their own weight. I really thought we were going to hold that range. It was kind of surprising. You saw the July-November bean spread was firm. Meal was firm yesterday. That changed today. They took out the lows. November beans there's just nothing. We are now new low closes all around. And it appears that the July-November bean spread is going to slow down. It rallied up to 24 here today, and they were able to sell it down a little bit. So unless we see something out of Argentina regarding those strikes and or a round of new surprising sales, certainly the outlook on soybeans is not friendly. Keep in mind, weather can change at any given minute. So if you got any questions, give us a call. Again, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. Thank you.